So I was I was testing the mic. I was testing the mic so that I ensure that everything is good and right and okay. So today is the 21st of January 2026. So that one tells you that time is moving very fast. Time is moving very fast, and we have exams. Exams will be on 23rd of April. 23rd of April. 23rd of April. So that one tells us that our time is limited, and therefore seriousness must touch everything that we do. Seriousness must be embraced on everything that we do. And therefore I want to call upon my students that it is high time that you stop the weird habit of missing classes. I would also admonish that you stop absconding, actually revision, your personal revision, even after the classes. I usually share with you the revision kit for each and every topic that we have, and therefore I would advise you that utilize your time well, and when result will be back, that is around May or June, you will be smiling. So it is now that actually you build that result. You have the ample time, and Mwalimu has also promised that at no point will he disappoint his students, and therefore should you actually fail to achieve what even me I desire for you, it will be on your side. And that is why Mwalimu is dedicated to ensure that he lavish you with everything that is required. So I would just like to get straight to our topic, that is chapter 2 of financial accounting. Chapter 1 we are done, and should there be any question, reach to me, and I will actually answer appropriately. Reach to me in case of any question in chapter 1. So chapter 2 is a recording transaction. Chapter 2, that is topic 2, recording transactions. Recording transactions. Yes, transaction must be recorded for future reference, and even to expound, maybe to expound on all various expenses. For example, during auditing. Actually, in auditing, auditors are never bothered about the income. What where their concern is always expenses. You received 1 million. How did you spend it? We want to see where the evidence is, where the receipts, where the invoices. So you have to prove beyond reasonable doubt. You have to prove beyond reasonable doubt, and that is why we have the recording structure transaction. There is no accounting without recording of transaction. What will make you an accountant is recording each and every transaction that you undertake. You have to record. You have to record it and file it for future reference. So I want us to know that it is usual to record a business transaction on a document. It is very usual. Yeah, it is very usual. In terms of accounting system, these are known as source documents. Yes. Recording, for example, we have requisition. For example, where I am, before money is given out, each and every department is to request. That is through the requisition form. You write your name, the reason as to why you are requesting that man, the value of the expense that you are going to undertake. Then I'm obliged to actually advise. I'm obliged to advise you based on what actually you are going to do. That is taking financial matters into consideration. So those documents that are always there, where the records are done, they are called source documents. So types of source document. Let us start with that. One source document that we have is called quotation. quotation. For example, I'm affiliated to a company called Kabiko Company Limited. Kabiko Company Limited deals in construction and building. So clients do always want us to quote for them. Maybe they want to, for example, the other time we were working on actually it was a compound. Somebody wanted this compound to be just presentable, and so he reached to us. So he inquired how could the compound be presentable. Of course, you don't want mud. Like when he comes with the vehicle, you want the vehicle to actually, there should be neatness. There should not it should not be muddy. So that one calls for actually it calls for cabro work. So he was advised by the help of the director that is only cabro that can make your compound be very neat, presentable. Even the parking, where you walk along the maybe the walls of your house. Yes. So he told the director that I need a quotation. Quotation shows like this cabro. What is it? Is it cabro alone that is needed? What else is needed? Is there maybe some other things that are needed? And if they are, compute them together and sum them up and share with me so that I can see whether I can afford. That is quotation. Number 2, we have purchase order. Purchase order. So this one are just like the name suggests. To purchase is to buy. Order is to actually maybe a list of something that you would wish to have. So companies do always write purchase order, showing their wish on actually goods or services which they would wish to do what? To purchase from another company. Then number 3, we have sales order. Sales order is another one. It is another one that is very vital, very key. So this one shows details of an order that a customer has placed for goods and services. Maybe we are dealing in a given line of products. So this one will always be written by customers. They want something that we offer, so they will write that in advance and bring. Then we have good receives note. Good receive note. Good receive. Good, we know what a good is. Receive is to actually the opposite of to receive is to do what? When you receive something, of course there is that person who is sending. So receive note, good receive note. So what is a good receive note? So for example, at an institution like Maisha Academy, when maybe certain goods have been brought, there is always a good receive note. So I usually go with the good receive note. So I just write, if it is maybe in the kitchen, food and catering, that is the food and catering expense. So you go with the good receive note. What do? You write what you have received. Maybe 10 liters, 3 10 liters oil, you note that. Maybe 25 kg bags of rice, 25 kgs of rice, you write that. Then you record also maybe one bundle of maize flour, you also record that. 1 bundle of wheat flour, you record that. So what you have not received, you cannot record here. You only record what you have received, and that is what good received note is. Number 5, we have goods dispatch note. Goods. So here is goods. Goods dispatched. Goods dispatched note. Goods dispatched note. So this one, what does it entail? So this one, it records, it is just the opposite of this one. This one now records what the company has sent. Maybe company A, maybe Kaviko Company Limited has sent certain goods to Maisha Academy. So goods dispatch note, this one is with Kaviko because Kaviko is the one sending. So it entails the list of things that a company has sent. So goods dispatch note is written by Kaviko. Then when Maisha will receive the goods that were dispatched by Kaviko, they also record in their good received note. I hope we are together very okay. Or is there any question? If there is a question, Mwalimu is here to help us. Number 6 we have invoice. Invoice is a key thing. So invoice, this is a demand for payment. For example, in a school like Maisha Academy, it's always good to use the example that actually you are very okay with, you've interacted with. So, for example, when students open, when school reopens, each and every student is invoiced. So immediately I invoice their accounts, all the students, meaning I'm demanding payment. Like term 1, they pay a given amount of money. So I ensure that each and every student is invoiced. Like their account is we do what? There is always the debiting and crediting. Like there is some money that they should pay. Because now when they reopened, like now they opened on date 6th of January. They have been here for some time. They have been eating. They have always been taught. They have always gotten very many services, which is to be paid. So when their account is invoiced, an invoice is something that is demanding payment. Yeah, invoice is automatically demands payment. So when I invoice their account, each and every one of them, they owe us some money. They need to pay. They owe us some money because they are our customers and we have invoiced them. They have received our services. They have been taught. So what is it? That is the invoice. Number 7 is statement. Accounting is sweet, my friend. Accounting is sweet. Statement. So a statement is a document, of course. It is a document that is sent by a supplier. It is sent by a supplier to a customer. And what does it entail? Listing transactions on the customer's account. Yeah? And these things may include invoices. This transaction, like listing the transaction on the customer's account, including all invoices and credit notes issued and all payments received from the customer. Are you getting that? All payments, including all invoices and credit notes issued and all payment received from the customers. Invoices. Are you seeing are you getting what is highlighted, what is mentioned? The three things. That is first of all, you have to know it is a document that is sent out by the supplier to the customer, listing the transaction on the customer's account. Excuse me. Like for example, I saw one of my students is saying, Mwalimu, you will die. Mwalimu, you will die. You are using dashless. You are using. Why? What was this? Was this saying about? But actually, we need to actually upgrade because this error is dangerous. So my students know that Mwalimu is also concerned, and we are getting out of that stage some days to come. We will always be using whiteboard. So I was explaining about statement. Statement is a document from the. It is a document from the supplier to a customer listing what? Listing transaction. And for example, maybe a supplier, what does a supplier offer? Maybe he's supplying vegetables. Like in Maisha, we always have suppliers. For example, maybe a supplier is bringing us vegetables, veggies. So at times we don't pay because we pay when we get money. So we may agree, like at times we agree that just bring, we are going to pay you on a certain date. So they always lavish us with statement, a statement of invoice, telling us that we owe them a given amount of money. A statement of what? A statement of credit notes, and even not a statement but credit notes, and even about payments that they have received from us. They're saying that I brought maybe vegetables of 3,000. You had paid 1,000, and now you need to pay me 2,000 more. So that is a statement. Yes, that is a statement. We have number 8. Number 8 is credit note. Credit note. So a credit note is a document sent by a supplier to the customer in respect of goods returned. Maybe a customer has returned some goods. Maybe the supplier actually sent goods that the customer did not was not in need of. So what will happen? The customer, of course, will return the goods. So when he return the good, or maybe credit note is also issued when there is overpayment. Like the customer paid more than you ought to have paid. So credit note, only faithful and honest, business-oriented gentlemen and ladies will always write this. In case of overpayment, of course. There are those who are always celebrating, like when now the customers overpay, they will not reach back. They will be celebrating. Because they are dishonest. And such businesses they have never thrived because of lack of virtues. So it is a document that is issued by the supplier to the customer in case there is goods returned or in case of overpayment. Then we have remittance advice. Before we go to remittance advice, we have debit note. We have debit note. Wait. You're making noise there. we have the debit note. 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 The debit note number 9. Debit. These are source document. Debit note. Debit note. Debit note. Debit note. So debit note is now the opposite of credit. Credit is issued by the supplier. Then debit is issued by the customer. So debit sent by a customer to a supplier in respect of goods returned or of a payment made. So when a customer realizes that some goods are not needful to him or her, of course she or he will return the goods. So when he returns the goods, he will do what? He will accompany it with debit note, actually highlighting, telling the supplier that the goods that you brought I never requested, like they don't even satisfy, like they don't belong to what I ordered for. So I have returned them. Or I made some payment when I visited you and I have just realized that I overpaid. That is issued by the customer to the supplier. Thank you. Any question up to there? Number 10 is remittance advice. Remittance advice. So remittance advice, this one is now sent to the supplier. It is accompanied by payment. It is accompanied by payment. Like for example, excuse me. Yes, I'm saying that it is sent to supplier with payment, detailing which invoices are being paid and which credit notes offset. You get that? It is a note. It is a document that is sent, of course, by the customer to the supplier. It is a document sent to a supplier with a payment. Actually, it is with a payment detailing which invoice. Remember, suppliers, before we pay, like they issue us invoice, showing us and even showing them that we owe them. So when we send to them remittance advice, it is a document that we send to supplier, of course with a payment, detailing which, at times maybe there are many invoices, so you have to specify which invoice are you paying. So detailing which invoice are being paid and which credit notes are being offset. Credit note, we talked about it. Credit note, we talked about it. That is number 10. Then the next number 11 is receipt. Mwalimu is sorry, but now that this class is also an online class, I think I will not, of course, interfere with my students. But Mwalimu should have good manners. So I know I'm gonna improve, and everything will be fine. Yes, receipt. Receipt is our number 11. Receipt. So a document confirmation that payment has been received. This is usually in respect of cash sales till receipt for cash register. For receipt can never be written when there is no money that has been received. So you won't write receipt when you have received money, cash, liquidity, cash. When you have received cash, that is when you write a receipt. For example, when in Maisha, parents usually come to pay fees, we write receipts. Of course, we are soon transiting. We are, things are done online, and we are not also technophobia. We don't fear technology. We will embrace other means so that receipts are generated electronically. Yeah, we need to work like people who are in advanced generation. So that is it. These are what we call source documents. So when we talk about recording transactions, this one should always linger at your mind, and you should have them at your fingertips. Thank you very much. Thank you very much. So we will of course check. We talked about invoice. So what does an invoice show? We need to say that, what does an invoice show? What does an invoice show? Mwalimu is requesting the student that kindly allow me to rub this part. Allow me to rub this part. Allow Mwalimu to rub that part. Yes, one of my students is telling Mwalimu, hold on. 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 Yes, I'm holding on because you are my employer. You are my employer. You are my employer. And even if you are not my employer, doing what you requested for, provided that it is morally upright, it is encouraged, it is supported. When done, now tell Mwalimu that you are done so that I can get along. So that I can get along. Yes, Mwalimu is back. Mwalimu is back. I know you are done. You are done with that part. You are done with that part. rabbit. Let us rabbit. So that we go to another thing. So what does we learned about invoice, and the invoice we said it primarily demands for payment. It primarily demands for payment. So what does an invoice show? 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 Yes, that of course that is a question mark. What does an invoice show? Number one, name and address of the seller and the purchaser. Of course, name and address of the seller and purchaser, of course, and purchaser. B for boy, date of the sale, C, description of what is being sold, description of what is being sold. D we have quantity and unit of what has been sold. Quantity and unit of what has been sold. Then E is details of trade discount. Of course, if there is trade discount, details of trade discount. Details of trade discount. Total amount of the invoice including EF. Total amount of the invoice including details, if any, of sale tax. Yeah, total amount of the invoice including sale tax. Total amount of the invoice including sale tax. So this is what is all usually in the invoice. Those are things that all usually are in the invoice. Also, the last one, G. Sometimes the date by which payment is due. The date by which payment is what? Payment is due. So we have those ones. So another thing that we should know, this one I will just highlight. Uses of a multi-part invoices. You know, there is an invoice that is having many parts. So as stated above, invoices may be used for different purposes. Yes, multi-part invoices. Uses of different invoices. One is to copy to customer as a request for payment. To copy, of course, to copy to a customer as a request for payment. Number two is second copy to accounts department to match to eventual payment. Yes, to second copy to accounts. First, remember, first is to copy to copy to customers a request for payment. Second, copy to accounts department to merge to eventual payment. Third is copy to warehouse to generate a dispatch of goods as evidenced by goods dispatched. And number 4 is fourth copy staple to sales order and kept in sales department as record of sales. Yes, I'll share that so that in case somebody is having a question, we can do what? We can answer. Books of prime entry. So books of prime entry. This is now the beginning part of accounting. Accounting very nice. 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 So books prime entry. Books of prime entry, also known as the books of original entry or the day books. Yeah, day-to-day books that we will always ensure that we record. So the main books of prime entry are as follows, or original entry. Number 1 is sales day book. Yeah, stating what you have sold, the amount, the quantity. Then purchases day book. Get that? Sales returns day book, purchases returns day book. We have journal. Journal. Then we have cash book and petty cash book. Cash book and petty cash book. So in our next class, we will start just the ones I have mentioned, the books of prime entry. We will check them one by one up to there are 5. Then from there, we will also talk about bank statement. We will also talk about petty cash. Then from there, we will start now the basic double entry rules of accounts. Yes, that is what we will start. Then after that, there will be an illustration to make us understand it better. Then we will do we'll do the illustration to explain, to make it stick in the mind, Yeah, very lively. So I just, as always, I would like to encourage my students to always attend classes. Always attend classes. Always ensure that you don't miss any class. Any question? Any question? We found the chalkboard very neat, and you should leave it very neat. As I wrap, I expect somebody to ask a question. If it is clear, also say, Walimu, it is very clear, therefore there is no question. Confirm to me whether everything is clear. Is all right? Is all right? Is all right? Okay. Let us stop there. Always develop the thirst to study. Very nice. Very okay. As you do over and over, you can conceptualize. You get, the mind gets great. The mind gets used to it. And you now love it. It becomes easier. So on and so forth. Thank you for attending the class. See you next time. Thank you very much.